we've had some movement now on the Clarity Act, specific to crypto broadly, stablecoins really. So Matt, can you explain that in further detail? What is it? Why was it stalled? What's changed in your mind?
So this event we saw in the last, I think, week or so, I think it was end of last week, we heard there was going to be a compromise on the language for this Clarity Act legislation. Call it the Tillis-Alsobrooks compromise. I don't think either of these two are big hitters in the context of history. Like, apologies for their own reputation, but I think the compromise itself is a massive deal. So it'll go on the record in the United States history from a monetary standpoint of one of the biggest like all-time chapters in terms of defining where we're heading. And I just didn't mean to belittle Senators Tillis and also Brooks, but you think about like senators in U.S. history and famous compromises, things like the Missouri Compromise, Henry Clay, the great compromisers, right? As you're going through these big social transitions, political reshufflings, all of that, you tend to see these compromises as a necessary event to keep things or allow the future to move forward. So this was a big fork in the road, our path, and we've taken it. But basically, what the key thing this Tillis-Alsobrooks compromise represents was really, we've talked a lot in prior episodes about Genius Act and its importance as a new infrastructure for dollar trade and financial rails outside of the U.S. regulated, financial system, economy, all of that. This Clarity Act now that we've reached this compromise allows us to move forward, and that whole process of reshuffling the whole post-war economic order. Think about it like in terms of the real economy, it's your kind of WTO globalization type of model, all this trade on ships, all of that. And then in the financial system, it's your offshore dollar that connects money centers in London, Tokyo, Hong Kong, Singapore, Abu Dhabi, Caymans, etc. That thing is being completely rewired. And this Tillis-Alsobrooks compromise, basically what it does is it separates from the US regulatory standpoint the act of monetary issuance itself, like the dollar unit, and it decouples the activity of, call it yield seeking, or what really amounts to lending, right? And so you think about, to help these kind of fuzzy concepts sink in, think about your relationship with the dollar in terms of your bank, right? You have a deposit. That deposit is a lot, and then the bank as this kind of monolith in the middle under the fiat dollar system that we've been operating since really 1971 and 1967. I talk about the removal of the metals, backing of the dollar from the silver standard. You got or the Silver Certificate Act prior to 1967. Your treasury bills. You think about treasury bills today being like the IOUs, the short-term non-coupon bearing debt that usually banks and money market funds, sometimes individual investors will buy them. But pre-1967, your treasury bill was actually the dollar bill that you'd tuck into your wallet. If you look at them, they're kind of white gray with the blue stamp. You can go buy them on eBay or wherever. Now, every once in a while, you'll find one in circulation, somewhere. If you find one, grab it and tuck it away as a keepsake. But what those were dollar bills, but they weren't the fiat legal tender kind of Federal Reserve note where we've grown up thinking about it for most of us our entire lives. Everybody born after 1967, this is the dollar you've interacted with. But that old silver dollar certificate was actually it wasn't a credit claim. It was a redeemable piece of scrip for, say, an ounce of silver or a defined weight of metal and you could redeem it at the Treasury's window, which are like they're set up throughout the country. But what you would get is, as large banks or financial intermediaries, sometimes, entrepreneurs, hedge funds, back in the 60s, they'd aggregate these Treasury bill dollar certificates, which was our money, bless you,
Thanks.
pre 1967 that the real economy would deal with, and then they would take those in and arbitrage them against the actual spot prices of the metal itself. All right, so that was the real economy. You had a dollar tied to silver, which was really the treasury at the end of the day controlling your short-term money supply, or the sovereign, the public, or as we called it, we talked about it in the Bismarck sense. What is the government? At the end of the day, the government is the executive, right? Plus their backstop as commander in chief, the military. At the end of the day, that's when history says we get when things go to the mat, that is what think about that as the government. And so same way 1971 represented breaking that link, the dollar's link to gold, which was the base metal, backing within that global financial system. All right, why do I bring this up? In the context of the Tillis-Alsobrooks compromise, when you had those metal redeemabilities for it wasn't credit, they're like script notes, right? Your unit of account, the dollar itself. You could actually like take your money and remove yourself from that credit creation activity, the yield seeking, right? All you had to do, get your
Convert.
dollar treasury
Yep.
bill. Yeah, you could technically hold it. It's as good as cash, or you could buy the metals coinage back when, the silver content of, say, the Kennedy half dollar, or the coin we'll get to in a second, the Morgan dollar, was, fully anchored to that defined weight and measure definition of the dollar. So you could exit the financial system with your money. Post 1971, you don't have that anymore. Your dollar is someone else's liability. So this compromise, I know everybody's kind of missing it here. With the stable coin, you've got a dollar. It's a pseudo asset, and it's backed not by metal, but by treasury bills, right? So you're kind of in the middle of one system and another. This is what would you call it? It's I would call it an evolutionary step. Like, what we're doing is rolling back. We're rolling back to where the system was pre 1967. That's the evolution, right? But it's not a revolution in the standpoint of we're just going to hyperinflate those old claims away. We're going to debauch the base layer money of society. And that's where, the famous quotes from, you can see them from Keynes, from Lenin, um, all of these important historical figures in the early 20th century recognize this. And the Austrians are ultimately right, at the end of the day, is that what they're admitting when they have these quotes that say, "Hey, the fastest way to conquer or defeat a society is to debauch their money," right? So what we're doing here with this Tillis-Alsobrooks compromise, I know it's being presented within the financial media and the crypto, social Twitter, X, all that media. It's being treated as a basically preservation of the banking cartel's monopoly on lending, interest, credit expansion activities. I argue it's actually something slightly different. We are decoupling those two essences of money that this fiat system forced upon the real economy. Now with stablecoins, those two things are, instead of being enjoined like this, and they get to be like overlapping totally. Like when you think about all of these developments that took place in financial legislation, like Glass-Steagall in the 90s, for example, combining the commercial banking activity of monetary creation, lending, et cetera, and investment banking, securities underwriting, all of that, collapse all of this into a behemoth blob. This compromise to separate the stablecoin issuers, like who is the issuer of your It's not a credit note anymore. It's script. It has to be redeemable into dollars, right? And the anchor there
Yeah.
is treasury bills. But you're separating that out from the lending activity. And so those are two separate things. And this is going to come into play as this stablecoin dollar now competes with the old offshore dollar. I don't want to spend too much time on this, but the old offshore dollar network at the end of the day, it's just a patchwork of credit claims. And it's just what it amounts to is just leveraged U.S. Treasuries, right?
Right.
Hence
Hence
the kind
your
of
X
pun in
handle.
my
Yeah.
X title. It's all levered USTs. Yep. So that's where we're going. But this Tillis-Alsobrooks compromise, I think it goes down on the record as one of the more famous economic compromises in United States history. Ask your AI chatbot to put together the other ones, but these are things you saw frequently as the United States was, you know, going through prior upheavals, transitions, and the regulators, governance, elected representatives, all of that were, debating with themselves which way we were going to go. Now it looks like we have the general agreement. The bill came out of or it was passed out of committee. Now it goes to the markup process, which means add amendments. There are like 100 here. Elizabeth Warren accounted for 40 of them. The Clarity Act can get killed here. It's not done yet. Like you can still strangle this thing. There's still a window for it to fail, but it basically has to happen like basically now.
Yep. And so
Timeline is very urgent because you've got midterms coming up. Once you get into July, August, everybody's pressure point comes on. Hey, let's get reelected, and no one's gonna pass a big bill like this. So the time is now. If it's now or never.